On everybody, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. Some of these names have major earnings this week. These are names like Apple, AMD, and Amazon. We're going to talk about the earnings expectations and how much we can anticipate these stocks to move on those earnings releases. But first, we have to talk about some key events that happened last week and some things that are happening this week that could potentially send markets higher or force them to pull back and retest these lows. First things first, the most important thing that happened last week is going to be the release of the PCE report, which is the Federal Reserve's preferred inflation gauge. We can see that inflation has been lingering around 2.8 to 2.9% for the last 4 months, which is still above the Federal Reserve's target of 2%. Remember, inflation did reach a high of about 9.1% in the last 24 months, so this is significant progress, but it is still lingering a little above that target of 2%. Now, the Federal Reserve has made markets a little uncertain over the last month. We can see that ever since they started stating or they floated the idea of having no interest rate cuts this year, the market has pulled back significantly. But this week, we will be seeing a definitive update from the Federal Reserve on where they stand on fiscal policy and interest rates. We've had 2 FOMC meetings so far this year. We're going into our third this week as we close out April and go into May. Now, the FOMC meeting has historically moved markets significantly up or down depending on the interest rate decision, so we can anticipate that that will be the biggest mover this week to start off on Tuesday and Wednesday. But this week, we will also see earnings from Apple, AMD, and Amazon, which will also be major movers in the market. So with all that being said, we're expecting a very volatile week ahead. Let's talk about some charts that we can utilize in order to navigate through the week. On SPY in specific, we always like to start off with the daily time frame so we get an idea of what's happening on the macro picture. Now, on this macro picture, we have some important indicators that we always utilize. Here in this case, we're going to be talking about the 10, 20, 50, and 100-day moving averages. The importance of these moving averages is used by Wall Street and institutional traders to gauge whether a stock is currently in a bullish or a bearish direction. Now, the 50-day moving average in specific is used as that gauge, and you can see that SPY is currently trading below it, which means that we are at risk of turning back down. So your job as a trader every day this week, at the start and end of every day, you want to see where that daily candle closed in relation to that 50-day moving average. If it can recover back above it, then buyers are regaining control and can potentially send us back to all-time highs. But if it struggles and stays below it, even after all the events this week, then it can spell trouble and we can move back lower. Now, if you are looking at an even smaller time frame on SPY, let's see the hourly time frame. Here are some resistance and support points you want to focus on. The first resistance in your way this week is going to be the 510.55 level. It is going to be hard for markets to break above that level before the FOMC meeting, which happens on Tuesday and Wednesday. And so we can anticipate markets to struggle to gain some kind of bullish momentum just because of all the uncertainty as long as they are below that level. When buyers finally get above that level, the next target above that is going to be right around 516 to 517. Now, to the downside, we do have a support at 502.45, but we must note that this move on SPY since the recovery has been a little vertical, which means that there was not much support built. And so this 502.45 is a little bit of a weaker support, so it can easily be broken if it was retested. And that will send us to retest the critical 493.85 level, which was the lowest point of the market's recent correction. If we move below that level, then SPY is expected to sharply move lower towards 482. Now, moving on to the next stock on our watch list, which is going to be Tesla. Tesla reported earnings last week, and although they missed on both revenue and profit expectations, the stock still bounced because of so many mentions of artificial intelligence and so many promised plans that it excited investors and it pushed higher. But we still don't fully trust the move on Tesla, so we are utilizing these levels to navigate through it. If buyers are going to gain more confidence this week, they're going to need to break above that 173.75 level in order for them to move into a more favorable range and start pushing towards 179 and 184. Now, this is a pretty aggressive price target, which means that it may not hit it this week if it does break out. So make sure you check back in order for us to update you on our videos. So make sure you're subscribing and liking these videos. Now, to the downside, we do have a support at 158.25. It can get pretty ugly pretty quickly below that level because we have an unfilled gap all the way to 145. Remember that Tesla has been long bearish almost this entire year, and despite its bounce on earnings, it is still making lower highs and lower lows, which means that sellers can easily retake control, especially after the stock missed both the earnings expectations. So below 158, we can see that 145 mark very quickly. The next stock on our watch list is going to be Apple, which is expected to report earnings this week. And of course, Apple is one of the biggest, if not the biggest company on the market, which means that whatever it reports and however it reacts, it will likely influence the entire technology sector. Now, like Tesla, Apple has struggled this year because of their falling sales and weaker demand on the iPhone, and you can see that the stock reflects that fully. While SPY and other stocks have been rallying to make all-time highs, Apple has actually been pulling back away from its all-time highs, a red flag for investors, and it could spell trouble on these earnings if they miss expectations. You can see that analysts have lower expectations on Q1 compared to Q4. Of course, Q4 is always the biggest for companies across the board, generally because of product sales during the holidays. However, Q1 is toned down, so even if Apple beats that $1.51 EPS, it is still not going to be enough to move the needle compared to last quarter. They're going to need to come up above $2 per share in terms of profit to really impress buyers and in order for the stock to move higher. Now, if you are looking at Apple on the shorter term time frames, here are some levels that you need to focus on. The first resistance in focus is going to be that 170, 135, and the next resistance is going to be right around 170, 370, which means that's your first price target on a breakout. To the downside, Apple is looking like it could be wedging up to make a further move lower, so keep that in mind. The more vertical a move is, the easier it could be broken, and this move is looking pretty vertical. So if Apple retests 167.50 and breaks below it, then we can easily see those recent lows of 164. Now, when we're looking at Apple's options chain, we can see that for this week's options, the implied volatility is reading right around 46%, which means that markets are currently expecting a $7.41 move from the underlying stock. Now, whether that move is going to be bullish or bearish will depend on those earnings results, but just keep that in mind. This week, we can expect Apple to make about a $7 move higher or a $7 move lower. Remember, this is just a projection. It can definitely move lower or higher than that, but so far that's what markets are anticipating on these earnings. Now, the next stock on our watch list is going to be AMD. AMD has struggled significantly over the last few months. It has corrected probably the most out of all semiconductor stocks. However, their earnings this week may rescue them if they can impress investors. Let's see what investors or analysts are anticipating for AMD. They are anticipating a little bit of a weaker quarter than last quarter. However, it is still positive growth nonetheless, and they're anticipating that this year will be a huge year for AMD in terms of growth. So when you're looking at earnings specifically and you're trying to make a decision on if this company is going to do well this year or not, you always want to look at forward guidance. In fact, when Meta dropped this week, you can see that Meta struggled significantly this week after their earnings. That was because the company reported poor guidance. Although the company came in above expectations, when a company tones down what their expectations are for the future, that's when markets are going to get a little uncertain and may sell off the stock. Because remember that markets are always forward looking. And so if AMD can come out this quarter and reinforce their quarterly earnings that are coming up, which are significantly higher, you can see that Q4 of 2024 is expected to be double of what it was last year, which means that if they can reinforce this message to investors that we are growing rapidly and we are still expected to grow rapidly into the rest of the year, then they may get bought right back up into where they were just a few months ago. And so going into AMD, we are leaning bullish as long as they can meet the guidance expectations for analysts. For AMD in specific, here are some shorter term levels to focus on. First things first, we have a resistance right around 159. So AMD is going to need to break above this 159 level in order for it to break out and regain more bullish confidence. To the downside, AMD has supports at 150.50 and another at 143.60. Remember, these supports and resistance points ahead of earnings can easily be broken depending on the earnings results. AMD may spike and gap up or spike and gap down. So these supports and resistance points are just the starter support and resistance points. We will be updating them in the coming weeks, so make sure you're checking back in. Now, when we're looking at AMD's option chain, we can see that for this week on May 3rd, options are currently reflecting an implied volatility reading of around 91%, which translates to about a $13 move on the stock or closer to 14. So analysts or markets are expecting about a $14 move higher or a $14 move lower, depending on how those earnings results are. The next stock on our watch list is going to be Nvidia, which is not reporting earnings this week, but Nvidia has been the talk of the town. Well, it has been for the last year. However, this week in specific and last week, it has been going up, and you can see that it got bought up significantly from its lows, primarily because almost every company that has reported has mentioned artificial intelligence. Tesla in specific mentioned Nvidia by name, that they will be working with them to improve their AI. So of course that drove Nvidia higher because Nvidia has already been the artificial intelligence prodigy child, and of course more mentions of the name is going to bring more attention to it and likely going to push it higher. Now, AMD's results this week will have a ton of influence on Nvidia's movement as well, so keep that in mind. When AMD reports, Nvidia is going to move accordingly. For Nvidia in specific, if we start off on the daily chart, we can see that Nvidia has recovered back above its 10, 20, and 50-day moving averages. This is what buyers want to see happen with SPY this week. It hasn't yet gotten above that level, but this is what they want to see happen if they want to continue that upside move. Nvidia is back above those levels, which means that buyers are starting to retake control, and they're doing so with strong volume. If you're looking at Nvidia on the shorter term time frame or the hourly time frame, it is already back within favorable bullish range. We may see a pullback to start off the week because buyers are going to be anticipating the uncertainty of FOMC, and they may take some profits, but nonetheless, we are still bullish on this stock. The first resistance in focus is going to be 908.50, and above that is 933. And of course, Nvidia makes massive moves when it does move, so it is not out of the picture that Nvidia can retest its all-time highs within the next 2 weeks. Make sure you check back in because we will be updating Nvidia in the coming weeks. Now, to the downside, because of course nobody knows what will truly happen, we do have some supports in place that can guide us along the way. The next stock on our watch list is going to be Meta. Of course, we already talked about Meta's earnings. The company beat on both profit and revenue, but still dropped because they lowered their guidance forecasts. Now, unfortunately, Meta has now entered an uncertain range because you can see that the last time it gapped up on earnings, it continued to move higher for the next quarter. And now that it has gapped down, it can potentially start moving lower over the next quarter because markets are anticipating those weaker guidance numbers to start hitting. Remember, we already mentioned that markets are forward looking, and so if a company reports poor guidance, the market is not going to like that for the next quarter. So for Meta in specific, here are some levels that we're focused on. You can see that we don't have a bullish range for Meta. We do need to see a little bit more development before we can expect any kind of bullish movement. To the downside, Meta does have a support at 399. Below that level, it can fall pretty quickly towards 359. Resistance to start off the week is 449, but still we wouldn't be comfortable taking a bullish position on Meta yet until it develops a little bit longer. Last but not least, the final stock on our watch list is going to be Amazon, which is also expected to report earnings this week. And you can see that Amazon came down to its 100-day moving average last week, and it got bought up very quickly with very strong volume back above the 50-day moving average, which is already a good sign going into their earnings. However, when we're looking at Amazon's earnings in specific, we can see that analysts have toned down their expectations for the quarter from last quarter, which means that if it beats the 82-cent EPS or earnings per share that's expected, it's still not going to be enough. Analysts are going to probably want to see something closer to 1, which is what it did last quarter, in order for them to really be impressed and in order for buyers to really step in and buy up the stock. Now, like AMD, Amazon does have strong expectations for the rest of this year. And so if they can come in and reinforce those expectations, we do expect the stock to move higher. When we're breaking down Amazon's expected move, we can see that implied volatility is currently reading around 80%. That means markets are expecting about a $13 move from the underlying stock, closer to 14. So here are some levels to focus on. If you are looking at Amazon, let's go ahead and actually remove some of these levels because these are not updated. Let's go ahead and update them together. So first of all, let's go ahead and pull up Amazon here. On the hourly chart, we can see that Amazon's highest point last week was around 181.80. This was the point right here before it got rejected. So 181.80 is going to be a major resistance for us to watch. The next resistance is going to be right around here, 184.90. This came from this double top that we see right here. So let's go ahead and place a resistance at 184.90. Supports in place are going to be this support right here, which was Friday's lows around 176. And then we have a gap fill to about 174, and below that gap fill, we don't really see much support to around 173.59. This was this buying candle right here that was equipped with a ton of buying volume. You can see that there was this buying volume, which means that this is a very strong candle. So 173.75 is going to be our support right here. So we're going to move this to 173.75, and below that is 166.30. So these are our levels for Amazon coming into this week if you want to mark those on your chart. And again, markets are expecting about a $14 move on this. So that move will depend on the earnings results. If they impress, that move will be higher. If they don't impress, that move will be lower. A couple notable things about last week before we wrap up. We saw Google come in above expectations, above the last 4 quarters as well. The company announced about $70 billion in stock buybacks, and they announced their first ever quarterly dividend. This is a stock that we have been holding since around 139 when we entered it back on March 13th. And we can see that the stock moved to our price target of around 175 after their earnings, which was fantastic. Microsoft also beat expectations. The stock did move up, but it didn't hold the full move up because it came in around the same plateaued level as it has been coming around. But nonetheless, don't forget that Microsoft is heavily influenced or involved in artificial intelligence. So AMD's earnings this week may move the stock as well. And so that's all we have for you guys. Thank you so much for checking in. Make sure you subscribe and like, and see you guys next video.